Hey, what's going on, guys? This is TerrenceRe, uh, back with you with another stock market update. Today is a today is a big day. We got the FOMC. We're gonna get the interest rate decision. Well, they've already basically uh, decided on what they're gonna do. I imagine you're just gonna see the print, and we'll see, how many basis points that the Federal Reserve are gonna raise interest rates. And then after that, we'll hear Jerome Powell, talk and take questions and speak. And that's why I think we'll get most of the movement. I think everything else is baked into the market. It's like a 99. If you go to the Fed Watch tool on the CME website, you'll see that it's like a 99% chance that it's going to be a 25 point basis increase. And so that's what more than likely that's what we're gonna get. Now, if they were to shock, like they would have like they wanted to shock the market. Let's say they did 50, which, like I said, it's a 99% probability that it's going to be 25 points. If they were to do 50 or 75, that would shock the market, and then we would see like big moves. I don't think that's gonna happen. So what will really make the market move is afterwards when he starts and when they ask him questions and how he answers the questions. And Jerome Powell will probably try to manipulate. And I know that sounds bad, but he'll try to get the movement that he wants out of the market by what he says and how he answers his questions. So that's that. It's everything else is baked into the market. And so right now, just looking at the market, is sort of flat. S&P 500 is, it's showing red, but it's down about 6 handles. That's flat for that. You got the Nasdaq futures, that basically, going back and forth between 1 and 2. So everything is flat. The Dow futures are down almost 0.5%. Um, and then you see the Russell is green just slightly. We got the bonds are slightly up. Now I do have a bearish position on in the notes. I do have a call spread on /ZN. I'll just talk about that position, and that's just basically I got a low high and I got a lower low. I actually got in like right here. So I sold that call spread, and I think I got, so if we go to the trade tab, I got 23 days on it, and you can see where I'm positioned at right here. So I'm actually in pretty good shape. I just need the market can stay where it's at, or it can go down a little bit, and I'll get paid over on theta decay. Either way, so I'm gonna sit with that position because I am bearish. I'm just, I'm trading what I see. Got a lower low, got a low, high, lower low, right? And then I'll get in and jump in with a trade. I just happen to see that. I don't know. I want to say this might be my first time trading trading the actual ZN. Normally, when I trade the bonds, I would trade the TLT. The setup doesn't look as clean in the TLT as it did in the notes, so that's why I took it in the notes. And I actually seen the setup in the yields too. You can trade the yields on TastyWorks. So you can come on here and trade I could have traded the 10-year yield um on the small exchange, or I could have traded like the micro and bought the yields. Because if you if you're bearish on the bonds, then you could come to the, let's see, if you came to the 10-year treasury yields right here, that means if you're bearish the bonds, then you would be bullish this. It will look better. Let's see if I can find a better chart for it. Well, I'm gonna come over to the watch list. I'm gonna pull it up over here, come to futures, come to small exchange, and then I'm going to pull up the 10-year yield. You see that colon SME, that's the small exchange. I'm just looking at the spot price. So the chart looks better, and you can see that this is almost like the opposite of the bond. So I could have bought this outright or did the option in the notes. I chose to get the options in the notes. This is a bullish setup on the yield. So you can buy this 10-year yield and hold it. And if I was to go to the active tab on the futures tab here, we come over here to the smalls 10s. I would have came here if I wanted to buy that and then click here. And if you do that, you can see it will margin me about $400. So it's not bad. It's not a bad, I could have did it either way. The only thing about doing this is you got to be right directionally. Doing the option, I have positive theta by selling that option. So that's that. But also what I wanted to talk about was the financials. The financials. So this is I'll go out here. A lot of people don't like to make predictions because they don't want to put themselves out there and be wrong. I mean, you can't be right if you don't make a prediction. So if you're wrong, you're wrong. I actually am bullish the market overall, and the reason why I am, even with everything that's going on, like you know, we got escalating war in Ukraine, and the only reason why I say we know it, like it's talked about. It'd be something different if the war just came out of nowhere. I think all of that is baked into the market. Like all of that is being taken into consideration and it's already factored into the market. It's not like we got news of a war out of nowhere, like a black swan event. So I think it's baked into the market. So I don't think that's pulling down the market anymore. Just look at the XLF. Right. So this is what I got pulled up. I got the XLF pulled up. And if you look at this, this right here is a bull flag in the XLF, which is the ETF. This is the financial sector. Right. So you got an up move and a pullback. That right there is going to that's a bull flag. And then you see your up move. So anytime I see that, then I'm going to stay bullish in this particular sector. I like not only do I like the XLF, I am long the XLF in another account. I like Citi. I like the setup. I'm gonna pull up Citi. Now this is Citigroup. Same type of pattern. Even though it looked like it may be on a downturn, which is possible. This is something that this ain't a trade per se, like maybe a day or two with me being in the XLF. I may hold it for possibly a few months, just depending on. I'll show you where I would get out at, where I would cut my losses in the XLF. If it was to come down here and take out this low at 29 and a half, it come down here and take out this low, I'll take that, $7 loss. But I'll hold this, and as long as it goes side to side, it pays a dividend. So you get a 21-cent dividend. So you get paid for holding it during it going side to side, and I do think it's possible for it to make it up here to touch, I would say $44. Let's take that off, because even if you go now, let's go look at like a 3-year chart. Let's zoom out 3 years. So you can see up here where the 3-year high is right up here around, let's call it 41.50. And so we're right like in between that right here. So I think it's a great place, in my opinion, for me to be long the financial sector. And if you look at the other big banks, they're positioned well. Look at Citi. Citi got plenty of room to run, right? It's sitting at here at $51, pays a 51-cent dividend. It can get all the way up here, I think, to $64. Now you can buy it outright. Now I'm not long Citi. I just bought the whole sector instead of getting one particular bank, because you could have something happen in one particular bank and it come down some, but the whole sector stays up. If you were to look at JP Morgan, I think it's in the XLF. Look at it. Look at that chart. That's a nice chart. That's a nice chart crossing over this wildest smoothing moving average. Let's look at Goldman Sachs. Same thing, right? It's a strong chart. Let's look at Morgan Stanley. Morgan Stanley's up. These are nice charts, nice setups, looking like they're like, so you got, look, Bank of America, after all this down movement, it's kind of at the bottom just hitting sideways. So I don't like this chart as much per se, but you can see even today, you got this big green candle looking like it's trying to, you got you some resistance right here at this gap. So can it go up here and take this out? We're here with now I'm already in the XLF. What I wouldn't do is put on trades right before the FOMC. I think the best thing to do, in my opinion, is wait till Jerome Powell gives his speech, or maybe during the speech, kind of gauge on which way the market's going to move. We'll probably get a big move. Probably we get some good trading this afternoon, and you'll get some good trading tomorrow. Like any type of intraday moves, we'll get good setups later on today, maybe even tonight in the future market, and also in the Forex market. And then tomorrow, you're going to get some good trading because now you got the FOMC out of the way. And also, we still do have some big earnings coming up. I think with Apple. Let's see. I think we still got. I'm looking at. Where's Apple on here? I want to see what Apple is. Right here, Apple. We got earnings on Apple on the 2nd, so that would be tomorrow. Amazon is tomorrow. So we got some big boys coming with earnings, and we got Meta got earnings today after the bell. So let's take a look at Meta. Do I want to do a earnings trade? Let's look. I just want to see what the chart look like. So obviously we got resistance right here. And where would some support be? Maybe right here or right in here. So if I did anything, I'd probably do something like a butterfly. It would be something like, I would go 2 days, and I probably would do something like a butterfly. It's got a $14 expected move in 2 days. That's large. That's a pretty big expected move. If I would have did anything, I would do something down here, put a butterfly down here at the end of the expected move. But I think I'm gonna stay out of it. Uh-oh. Make sure I put it back. Okay. So looks like my green screen faded out on me, but that's okay. So today, like I said, I think I'm bullish on the financials uh, until otherwise. We'll see what Jerome Powell has to say today, and look forward to a video tomorrow. I may even live stream tomorrow morning. We'll see how the market's looking when bell get ready to open up. With that, guys, I'm gonna be out. Peace.